Good morning, traders, and welcome to the live trading webinar today with Scott Pulcini, a futures trader. This is Bruce at Bookmap. I'll be hosting. Scott will get started in just a minute. He does this every Thursday at 10 a.m. It's Scott completion of our educational services here at Bookmap. We have the kind of initial start. Is we have free educational course on YouTube. I can show you where that is. It will go through the basics, understanding basic market mechanics. It is imperative that you understand this stuff. It is here on our YouTube channel under bonus materials down here, view full playlist. You'll see the educational course here. Parts 1 through 4. Please at least start with part 1 and 2 to understand basic market mechanics, what makes the market work, because Scott is going to go over some advanced concepts based on those market mechanics. All right, so now we also offer live analysis daily in the advanced webinars. So we put all of that education in the course to the test, and then finally we have live trading so that you can watch another professional in the market trade and use Bookmap and order flow in their very specific or proprietary ways. So you get the whole gamut here, and that should complete your education. So we do it week in and week out. So you guys maybe know who Scott is and his story, trading just about responsible for about 10% of the S&P E-mini futures back in 2002 to 2005. I have Scott's contact information. He does offer mentorship and education. He's got a trading room. He's got an educational course. He got his email and a website here. I'll put it into the chat so you can reach out directly by just clicking on the link. Let's go through the disclosures and then turn it right over to Scott. All right, so oops, sorry about that. What happened there and how did I do that? Okay, there we go. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. So know what you're getting involved with in here. This is not some sort of trade copying room. This is about applying order flow techniques from another professional trader. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Scott, are you there? Let's see. There he is. Okay. How are you?
Good, how are you?
I'm okay. I'm okay. Let's see. If you can share your screen, then I'll rebroadcast that and we'll kick it off.
Sure.
There it is. Okay. Got it. Good to go.
Very cool. All right, watching these equities, I was just short NASDAQ. I actually have to trail my stop here. Kind of missed I was going to get out of one here. We'll go over where I was going to get out. So hopefully this doesn't come all the way back on me. But now, because of this new setup, we'll go over these setups, why I got short. But because of this new setup, I can now trail my stop. So I got this new spreadsheet in my room where it gives me exact prices where I'm not just estimating, where I can plug in the ER. This is the zone I'm short off of. We'll go over that.
Scott, your voice is a little low. It's like you're kind of like passing secrets in the alley or something. Undercover.
Is that better?
Yeah, I think so.
Okay. I didn't even put the zone in yet. I got to figure out where my stop is here. The thing's going to come all the way back on me, but I like the short there for a second. I'm just hoping we can get down to this area. I'll show you here once I get the zone in, if I ever get it in. So the top of the zone was 3150, and the bottom of the zone was 298. All right, so to get out at 71.71, so 71.75. Very surprised this came all the way back like this, but I mean, I'm not surprised equity-wise because that's what always happens, it feels like, but we'll go over some of the reasons I thought this thing was just going to die right there, but did not. But the worst case scenario is I scratch this trade, even though it was a pretty nice winner. That's my stop. So you can see my stop was originally, I didn't even put it in. I didn't even put it in when I got it. This happened so fast, but so what had happened, it was a setup up here. Let's see, right after the open, there was this one. So there was sell ice. I drew this black zone up here, and then we had a stop run. It had a stop run 190. My threshold for Nasdaq's 150. So my thresholds basically tell me when it's worth trading, right? So a lot of guys get this SI indicator, SI subchart, and they're like kids in a candy store. And every time they see a spike, they're trading off these spikes. So, from watching thousands of these setups over the last few years, I've determined what is the adequate amount that the market responds to, aka threshold. So this was a threshold, and I've made a little bit of an adjustment with my where's my drawer guy? Hold on. With my entries. You guys know how I've been. There it is. If you watch my prior webinars, you guys would see, based on the Ludwig levels, where I would. Where I would get in aggressively or conservatively. I have two different entries, right? And if we were below the yellow log, I would get in aggressively, so on and so forth. But I've determined what I'm doing lately is I'm only being aggressive in really important areas and or like breaks of balances, so on and so forth. So like important areas meaning like the zones I draw, and we'll go over some of these, why I have these drawn. Another important area where I would be aggressive, for instance, is say we were breaking out of a balance area, right? And so let's say we were breaking down out of there, I'd be aggressive out of there, something like that. But other than that, the majority of the time, I'd say 80% of the time now, I'm just waiting for a retest failure of these zones, and this is exactly what happened here, ATR retest failure. So that was the setup. This was literally an ATR to the tick at the time. And then we came back, we retested the zone. It was never able to push an ATR above this zone, so that is still the green light for the short. So when it came back and got 110% of an ATR outside of this area, I shorted it. So this is the setup. I shorted that. My stop should have been, I just didn't get a chance to put it in. I wasn't really worried about it because the market was dying, but my stop would have been 110% of an ATR above there. And then so I shorted that. And I was watching it, and then a new setup came in, so now I can trail my stop based on this new setup, and this was 172 buy ice, right? So and it looks like this puppy's going to come all the way back on me. This was real close to the fill. I should have actually just gotten out down here because this was into the blue lug, but by the time I looked over, because I had a crude trade on too, one of my other trades that I'm doing with my room. I should have got out of one at the blue lug, and it busted through here and built new lugs. So I'm like, you know what, I'll give this a chance to get down to this market profile composite. And you can see it got close, and that's where my bid was, and now it's coming all the way back. So I probably should have just got out of one regardless there, because I should have been down at this blue lug anyway, but I did not, and it looks like it's probably going to cost me. So this somehow cannot push an ATR above here and come back, then that's where I'm getting out of one, and I'll try to hold. So, I pay myself. So we'll go over this with this trading in the zone document, but you pay yourself as you're right in important areas, right? And not meaning, not just because you have a profit, because you watch certain things every day, and you know the areas where the market may bounce, so on and so forth, important areas to you, whatever you're using, right? So my important areas, I'll just look at this again. Right here, number 5. I pay myself as a market makes. So this is all from trading in the zone, literally verbatim, right up. But I mean, I put in obviously my things that are important to me. But I pay myself as the market makes money available to me. Ludwig levels, so the major lugs, red and blue, and yellow. Market profile composites, highs, lows, PLC. So that's where I was going to get out of that one where I just missed that fill. VWAP standard deviations. I'll do that if they're confluent with something else. And then important predefined zones based on the candle structure. That's what it's showing you. So I will pay myself partial profit as the market moves into those areas, and then I'll try to hold one for either the major lug, right? So this would have kept going. I would have got out of one there, like I was saying, and then I would have held one and tried to get to this major lug and or an opposing setup. So say we were ripping down, and then you get a new SI stop iceberg setup, and it turns into a bullish setup. Well, I'll get out of that for that reason as well. Other than that, I try to hold it for the major lugs, and that's how you catch the runner of the bigger trade. So that's how I trade, and I try to stay consistent with that as best I can. So this type of movement sucks. I should have been on a 1, and this is kind of negative reinforcement for traders that this happened, right? So a lot of times they're in this trade and they're like, okay, I'm gonna, as soon as this comes back a little bit, I'm gonna get out. So yeah, that worked out that time, right? But over the long run, if you're just getting out randomly just because you're watching your P&L and you don't want to give back your profit, it's not going to work out for you. Trust me. So if you follow your rules and you have standard rules which you obviously should, but they have to make sense. And you have to do them every time. So this sucks. This came back. I did break my rule here, kind of, because I should have been out, especially right when I heard this buy ice come in, right at the blue lug. I should have just been on a 1, but I just was not paying attention at the time. So that cost me a little bit, not a ton. So that trade's done. So now what I can do actually is, because this never got an ATR below here, right? This never poked an ATR from this latest setup. So now if we go ATR retest failure, I will go long this market, and then also ES did the same exact thing. You can see here there was what was this? Almost 1,000 sell stops here, and we just ripped away from there. So if we happen to, this is barring another setup coming in. Let me my bubbles back here. If this market comes back to this zone and retest fails, I will go long this as well. So I wasn't really liking the long, but as I tell my room, and I'll show you here why, but as I tell my room all the time, you come up with your thesis, and then if you get the setups in line with your thesis, then it's go time, right? But if the thesis, if my thesis, if the market's actually doing opposite, which happens all the time, right? Well, you got to be able to pivot, and the real-time volume setups, the SI indicator setups, tell you if your thesis is wrong, right? So if this market was truly bearish, right, this market should have held this zone and went lower. Same with NASDAQ, right? And especially, this is why I was, shorter-term bearish today, is this was an important zone where we had this directional conviction the other day. It kind of held yesterday, and it started to break below right now. So this thing should have done this, at least to this directional conviction, and it did not, right? So point is, I was thinking this would happen, but guess what? Did I just jump in short because it broke this prior zone? No, because I needed to see a volume setup that showed me to go short, and it didn't happen. Actually, this was a bullish volume setup that we just looked at. So that's why the real-time volume is so important, because this is what's going on right now. I don't care what line you have on your chart. If the real-time volume is not agreeing with it, it doesn't mean much, right? So I avoided a short there. I was short NASDAQ, but I was able to scratch based on the setup, and now I'm waiting to go long. Either a retest failure of this zone, or if something new comes in, then I'll play that as well. So now we'll sit here and wait. So I'm waiting for a retest of both of these volume setups, this one for NASDAQ and this one for ES, and or something new. So that's that. one thing you want to pay attention to here, because I use this in the room as well, keep an eye on this. This is called the edge. It just tells you, so this is set for the S&P, but it's showing you out of the 500 S&P stocks, how many are above or below their 5-minute TAS boxes, which are just mini market profiles, right? So the whole idea behind this is if it gets overextended, meaning this is a 67% line, you can see the percentages over here. If you get above 67% or higher, many times the market will snap back. So at minimum, you don't want to be buying. If you see this thing up at 70, 80, 90%, you don't want to be initiating longs until this thing can pull back, and then it's a lot safer to go long. And then on the flip side, if the thing's overbought and you get a setup and it's in an area where you want to short, that's even better, right? So you can see this has been creeping up. So I will make exceptions. Remember, I just told you with these setups, right? I've been waiting for, so I'd say something fires off right here and I want to go short. I'll, unless it's in a really important area, I'll wait for the ATR, the retest, the failure, I'll go short. If we get up here, say this fires off and we hear a stop run coming up and that edge is at like 88%, I'm going to short it aggressively the minute we break out of the zone. So that's the one exception where I will be aggressive, because I've just watched this thing for so long and it's pretty golden. It's not, it's as close to red light, green light as you're going to get, but there are times where it'll get up here at 78, 80, 85%, and it'll just kind of hang here for like a half hour, right? And that's only usually when you get high relative volume, meaning the big money's playing. So, but I'd say 85% of the time, or a little more, once this gets up here, it snaps back. And so this is an edge product. It's called the edge. It's a TAS product. I don't think it's available to the public right now. I don't know why, but it's not my product, but I use it because I used to be in the trade room with TAS when I first started out doing the trade room instructor stuff. So I still use it and it's very valuable. So we'll keep an eye on that. So we're not initiating longs when the thing's overbought. If you guys remember a couple weeks ago, I initiated a short, never got to look at that, and the thing was like at 80, 86%, and I initiated a short. It was an ES actually. I was already short and I added, and I didn't realize it was oversold, and I got smoked on it. So you definitely want to pay attention to that. So this is what I was talking about, the TAS boxes. So just imagine these boxes for every stock in the E-mini S&P, right? So it's showing you if the market moves above the 5-minute TAS box, it means it's overextended and most likely will pull back. And so that's what that gauge is showing you. So spot gamma wise, this is important. This is an important area here. If we follow this as well in the room, but you can see on his notes here, he puts in, it's very important to keep up with this because I keep up with the very basic sense. You can go down a rabbit hole with this stuff. It's very, very interesting. Just like with anything, I try to keep it simple, stupid, right? So it's like, I use these levels for support and resistance. I pay attention when he says, this is something you want to pay attention to right here. When he says stuff like this, it usually is close to 100% right on, right? So what he says here is further, our critical support line vol trigger has been working its way higher along with the market. This is expected behavior and highlights that a break of 3,800 leads to an air pocket underneath, meaning what he usually puts in, there's an air pocket down to 3,700, and I can't tell you how many times where we'll break this level and it'll go straight down to 3,700. So the options complex is a very, very important part of the E-mini, S&P, and NASDAQ, and E-mini is the largest, the SPX is the largest option complex on the planet, right? So it's very important because you have, when the general public or whoever wants to buy or sell options, there's got to be someone on the other side. They call them dealers. Well, when the dealers get loaded up with positions, they have to hedge themselves. So they are a big part of the futures trade. So it behooves you to know where these levels are, and you'll be amazed at how the market reacts to them, right? So I'm not going to dive into that a ton, but he does have a real-time options flow. They have it on Bookmap as well. This is his standalone. I just have it on the standalone because I got so much stuff on Bookmap anyway. Actually, let's refresh this. I don't know if this is. This is always good to take a look at. Because when you see big divergences, you want to pay attention. So we'll take a quick look here. SPX. So you can see here, this has already started a divergence, right? So the black is the market's moving up. The option complex puts and calls put together, is moving this way. So that's this pink line or blue line, whatever color that is. I'm colorblind. So when you see divergences, that's important. And then when you see spikes like this, that's important too. That means the big money, someone came in and did one huge options play, and then you can see how the market caught up with it, right? So this is more of a kind of like a just sit here type of divergence, but you just want to pay attention to it because if this market keeps moving up and this not agreeing, the market will eventually come back. This is not red light, green light, right? Like this is not like an edge product where it's going to happen pretty soon. This could be, there could be a divergence for a while. So you just got to, be careful, but you want to keep it in mind because especially if you start to see the straight line spikes. So you can see the SPY, there's a little bit of divergence. Qs are pretty much right on. Actually, options are a little higher on this one. And then Russell as well. And we actually, I wanted to go over the Russell here because I saw some monster size. Looks like I already missed this opportunity, but you can see here, look at this. So 150 is threshold for Russell, right? Look at this that came in down here. 250, 250, 200. So it's 700, almost 900. Pretty much over 1,000 sell icebergs down here. That didn't work out too well for them. And that leads to another point, right? When this thing first came out, this SI indicator, when I was, talking about it and, learning it myself at the time, but we were doing webinars and you had all these competitors or would-be competitors. They thought they were competitors of Bookmap, but obviously no one compares to Bookmap, in my opinion. They were besmirching this saying, well, that doesn't mean just because you see sell ice doesn't mean you go short. And I never in my life had said just because you see ice in a certain direction. This is the big money. Yeah, I mean, you want to pay attention because they're right more often than they're wrong because they can push the market around. But they're not always right, right? And I actually have a distinct setup called broken ice for when they're wrong. And I missed this trade. So look at this. This is textbook. Like I always complain about. You guys hear it all the time. When I miss them, they're absolutely perfect without a hesitation of torture, right? So here's the setup. Here you go. I guarantee you that's an ATR. Here's your retest to the exact tick of the zone, and then you go long right there or wherever the ATR was. Let's see what the ATR is actually. So that's upsetting right there because I could have definitely hedged mine. That would have been a nice hedge for that NASDAQ short. Not that I trade like that. I don't put on positions just to hedge, but that would have protected me from that, letting that NASDAQ come all the way back because there was a setup in Russell. So down here, the ATR was right around, you can see it on the left there, right around 60 ticks. Right, so the top of the zone was at 93. I'm talking the last two digits. So 53 would have been your ATR. There you go. Went a little higher. Right, this was your ATR, 53. All right, I'm sorry, I'm thinking about my other strategy. But anyway, that's what you're looking for is the ATR to prove that this market can poke more than an ATR or more outside of the zone, which it did. Came back, retested. I would have been long 110% of an ATR, so probably right around 63, 65. And then my stop goes an ATR below the zone. ATR plus 10% below the zone. So I currently be long, but I missed the trade. But this is exactly what I look for. This is the conservative entry. Setup, ATR, retest, failure, go long. And then your stop goes an ATR below there. And I know what people are saying, well, you got to risk. Oh my gosh, when I put on the Russell, I like to risk 20 ticks. And you guys hear me every single week. My room hears me every single day. The market does not care what you want to risk. The market cares about volume events. The market cares about ATR, volatility. That's what you need to be paying attention to and basing your stops on that. So if you do have to risk, so if I would have put this trade on, I would have been in at 63-ish or whatever, like somewhere right around there. And I got to risk an ATR, so 60 ticks below. This is how I trade these, and it's from experience, right? I would have to risk 60 ticks below here, so my stop would have been here. So I mean, that's basically 180 ticks, something like that. That's a lot, but guess what? You just cut down your size, and that's what this spreadsheet we use in my trade room. This is the most important part of your trading, is controlling your risk based on the volatility. So here's a good example with this NASDAQ. If I would have taken that, if I would have gotten it off that last setup, my risk would have been 114 points. Is that a lot? Yeah, it's a lot, but that's what the volatility is telling me that it needs to be, that I have to risk if I want to trade and not get stopped down on random algo nonsense. So what does that mean? Well, usually I'm putting on 3 or 4 NASDAQ. Well, with that ATR, based on the zone, and here's your zone prices based on the zone, which is the volume event, based on the ATR, which is the volatility. This is telling me this is what I have to risk to not get stopped out on nonsense, random algo trade. So that means I have to bring my size down to 1.32. Obviously, you can't trade the big ones in fractions, but you can trade the micro. I could put on 13 micros or 1 or 2, if I want to round up. But you have to adjust your size based on volatility. You don't say, hey, I have to risk 140 points. I'm going to put on my normal size like I do when I have to risk 30 points. That makes no sense, and you're going to blow out your account. All right, that was my mini rant to start the morning. Still waiting for something to happen here.
It was a good one.
I was watching crude. I want to go long this as well. This is a good example of, not that I wanted to go long, but this setup is potentially a long setup. This is an important zone though. You can see here, this area was important, and you want to mark these areas on your bar charts because the market responds to them so many times on the retests, right? So this was what? Directional conviction. Directional conviction meaning straight moves down, and you can see it led to that. Comes back, and so kind of holds. What do we get again? Gap down, which is directional conviction. So this market closed here this day. This is a regular trading hours chart, so I can see the gaps. Gap down that led to this huge move, right? Talking 800 or $8 move, 800 tick move. That's pretty important area, right? You would think that led to this. That never tested it again until when? Right now, a little bit ago, right? So this zone is really, really important. So once it can get through here, yeah, I really want to be long. Not that I'll go long aggressively, but my thesis is long up to here. But right now, until this can prove, here we are again. We're back in this zone. This may just do this for a while, but until this can prove and get through the zone, that may happen. But so you come up with if then scenarios, right? So right now I would lean short, right? Just by saying, okay, you got to prove to me you can get through there. But guess what? This volume setup is showing me potentially long. So like I said, I can think something's going to happen as much as I want. It matters what's really happening in the real-time volume. So if this was pre-market, this was a big stop run. This was, actually, it wasn't that. What was it? Oh, I don't have it on this computer because I started this a second late. This was a 500 lot stop run. I'll just show you real quick here so you guys can see, and then let's see if there's any questions. Look over here. So I got another one running here so that I run all night on this computer. There it is right there. So this was pre-market. Obviously, this is 7:30 Central, 5:30 my time. The number came out, whatever number it was, I forgot. It doesn't matter. That's the stop run. That was actually almost 3 ATRs. It came back, it retested, and then here we are right now, right? Held the zone, not surprisingly, right? The market responds to volume events. That was the volume event. Again, it's not that, I'm sorry, it was over here again, but that was the volume event.
Yeah, beauties of an example.
I need to be going long this market, right? That's what the volume's telling me. I don't like going long in this zone, but guess what? One, the volume setup. Two, look at this liquidity up there. We all know, anybody who's watched these webinars or ever watches Bookmap, that is just pure, it's a magnet, right? It's the big money that has been in there forever, and they will push the market there eventually. So this is already set up for that zone, right? Because I was trading the reversion trade that we're doing in my trade room. What I do have to check is the ATR. The ATR is 29.7. So for the position trading strategy, because I already have my zone in there and nothing else is fired off in there since then, to go long, 89.28 would have been my price, and I can trade three contracts. So we're right here right now, right? I already missed it. I should have already been long, but because I was chirping, I missed it. So if this comes back up to, it's actually right there. All right, I got it in. I missed it by a couple ticks, so it should have been long at 28. I got in like a 31. So regardless, that was this, that was that, that was that. I should have been in right there, but I'm in. So now, what do I do? First and foremost, where's my stop? It's going to be 110% of an ATR below this volume event, which is what? 88.32. So I come over here. The spreadsheet's a godsend. Jayla brought up in my room, made it for us, and it's just incredible. So I've sit here. You guys have seen in prior webinars. I got to do all this like math in my head and draw zones and figure out where the zones are. It's just been so much easier. So that's my stop, based on the size of the zone, based on the volatility, not based on I only want to risk 20 ticks when I trade. Because guess what? If you got long this at any of these times, you would have been stopped out, right? So that's why I make the market prove it can push through these volume events plus an ATR and 10%. Then it means you're pushing through the algos that like to snap it back at an ATR, right? So that tells me, okay, then I'm wrong. On to the next trade, right? That's what it's all based off of. It's not hypothetical. Again, I've watched thousands and thousands and thousands of these, and that is the correct way to trade them that I've seen. Talk about it every webinar as well. This is science. There's no disputing. I mean, again, this is the smaller one, but there was the 500. There's no disputing that was a stop run, right? How you trade these zones is up to you. So I don't like risking this much, but I've learned the hard way of trying to play games like, getting in right when it breaks the zone and stopping out like in the middle or just out. I've learned the hard way. Algos are 85, 90% of the market. And when there's nothing going on, they know when nothing's going on, there's nothing going on as well. So they'll start whipsawing traders, the retail trader back and forth, taking your cash. So this is why I trade these the way I do. You can trade them any way you want. It's your money. But it would behoove you, especially if you're newer or you're struggling, use my method, and then as you get better at it, you can start to tweak it a little bit, right? And I'm always, if you have some better method, I'm always open to hear it. That goes for indicators, so on and so forth, right? I don't implement things right away in my trading. I need to see it work for a long time, like the lugs and everything else. But why did I not hear this? What just happened here?
Yeah, Scott, I don't know if your mic or your sound is
Oh,
off.
there we go. I'm sorry. I don't remember turning that down.
Can you hear
Have
me?
you been talking this whole time? I can hear you now.
Yeah, no, I had just a few comments about that was a good little rant, but that was about it.
No, sorry. So I totally missed this. I didn't miss a trade here, but I don't know. I don't remember turning that down. Sorry, guys. I've just been chirping. There we go. Let's draw this zone. So this was 1,000 buy stops, right? So I was waiting for a retest of these sell stops down here, way down here. Never happened. Now I got a new setup. Now I trade off of that new setup, right? So let's go in here and enter these values so I'm not guessing. So first of all, you want to incorporate all the prices that occurred. And this is where the SI on chart helps you, obviously. You can see this red line. It gives me the exact. So this is by design. This stop run, you'll see this red line. It starts before the actual spike. So when you're using just on stops, not on icebergs, and we'll go into that later, but on stops, if you see the line, as soon as you see the red line, that's where you want to draw it on that bubble, right? So on that price point, you can see the price line, usually white, and it turned red. That's right where you want to draw stop, and it ended right there. I turned it down because the guys were chirping in my ear. That's why. Now I remember. Anyway, all the prices, you can see this price line that occurred in this spike, and that's your zone. All right. So now we have, and this went higher, but this wasn't part of the spike, so I'm not incorporating this price point. All right. So let's bring our bubbles back, and then let's put the values in the spreadsheet so I don't have to be guessing. 38, 70, 25, and 67, 75 is the low. There we go, 38. What is that? 38, 67, 75. Important factor. Obviously, we talked about it, 8.96. You can see it at the bottom and in the middle. That is the current volatility of the market, ATR, average true range, for a 5-minute time period. Now, I can see position trading, where my prices would be if I want to go long, if I want to go short, where my stop should be if I'm long, where my stop should be if I'm short, how many points I'm risking. This doesn't really matter. If this was 100, it doesn't matter. this will change, right? So watch this. If I change this, say ATR was ridiculous, which it sometimes gets, say it's 20. Let's bring this down here. Watch how this change. Yeah, watch how this changes, right? So if I make a 20 ATR, I had a 2 ATR in there, I could risk almost 9 contracts. I'm only risking 7 points. If I have a 20 ATR, it goes up to risking 46 mini S&P points. It is what it is. I just cut my size down to 1, right? 1.29, or you can trade 13 micros. See how that works? So it doesn't matter what this is. You just have to change your size, right? And because this is what the volatility is dictating. I guarantee you, I don't even want to know the percentage because I'll get mad of how many traders in here. I like to risk five S&P points when I put on my trades. I showed you guys the email last week of the guy that sent me about the. I'll bring it up here again a little later because I love to just.
You should record a video of it, Scott, and then so you just watch this, and have a nice rant.
Now I like to do it live and lose my breath every time I'm on these. But the point is, I can't even imagine how many people on here put on trades and just say, I'm risking 4 points. And yes, 4 points doesn't mean anything, especially if the ATR is 8, 9, 10, 15, 20, right? We're just asking for that. And everybody, and if you trade, if you trade every day or, often, that happens nonstop. Why does it happen nonstop? Because the algos are 90% of the trade. That's why it happens nonstop. So stop doing it is what I'm telling you. All right, so let's figure out where we were here. I don't think I wanted to get short there aggressively.
And for those who don't have the size of an account to trade the E-minis, trade the micros.
There's nothing wrong with micros.
Micros are
I
great.
trade them on multiple accounts. I have a bunch of different accounts I trade. Even on, so we're doing the Apex, that's the trader funding, that's this account here. We're doing the one strategy in the room because we're testing out different strategies, and we're doing it obviously with, so I've qualified for the Apex. So again, and you guys just quickly just go to my website. You can see everything here. You get discounts, all this stuff on my website, Bookmap. This is the Apex, click on that. And it'll show my code. You get the 50% off, but this is the trader funding, right? So, I did it originally to, because I heard from a good source that they were completely legit, and it was a great company, and I'm like, you know what, I'm going to do this. I'm going to try to qualify. I was assuming I could qualify from, if I do this for a living, and I'm showing you guys webinars, so I'm like, I'll qualify, and I want to see if they're on the up and up, if they, give you your trading account, if they pay you when you make money, so on and so forth. So that's why I originally did this. Is back in March. I don't want to get totally into this right now because it's talking about the drawdown and everything else. But the point is, if you're working on something, or you're new, or you don't have a lot of money to be trading, there's no reason you can't do that. And you shouldn't be doing that. And a lot of people are like, well, I don't trade the same when I'm on sim. Well, yeah, it's on sim when you're doing the tryout, but it's really not, because you still have skin in the game. You still have to pay for they don't call it a combine, but the tryout. Trial evaluation. So you don't want to blow out the sim account because you got to re-up the money, right? So it's a great way where you're not risking your rent until you feel comfortable with what you're doing. And here's the thing: if you do that Apex and you blow out, you're like, oh well, it cost me $100. Like I did the $150,000 account. They have like a $50,000 account that's like $80 or something. You're like, oh well, I lost $80. If I was trading real, I would have lost 8,000. So that's fine. And if you happen to do well, then you're funded. Then you don't have to risk your own money anyway. So it's kind of a no-brainer to me. But you guys do whatever you want. But I'm just telling you, for the minimum, if you're trying out new stuff, say you're trying out this strategy, my strategy, you can open an account with them, pay your $80 for the $50,000 account, and start trading these and get good at them. Then when you feel good, if you're doing well, you're going to get funded, and even if you're not, you're going to get enough experience where you can start trading your real money, and you're not going to lose 50 grand, right? So that's the whole point on that. All right, any questions, Bruce? And I'll figure out where I wanted to see if I wanted to be aggressive here, but it doesn't really matter now. Looks like.
Let's see here. Any questions? Okay, no, there was some problems with your mic, but no, it's good. And let's see comments about your rants. And
Professional renter.
they are good, and they grow over the webinar. It starts off small, and they build. And then by the end of the webinar, it's like they're awesome.
My whole goal is to make you guys profitable traders, and my whole goal is not to have you go through 23 years of trials and tribulations. You can learn so much just by my pain and what I do well and what I do poorly. So you don't have to go through those mistakes. That's the whole point. That's the whole point of having a mentor, right? Where you don't have to go through the pain. You learn like, okay, God said this cost him $2 million. I probably don't want to be doing that type of thing, right? Scott says don't be having these static stop losses because you're going to get algoed, right? You don't have to learn that the hard way. Learn from me, and then you can bypass that and speed up your profit ability trading.
Yeah, so I just no questions. Well, one, I guess Juan is asking if you can go through like a setup about that line in red. Whatever, I don't understand. But anyway, Juan, I put in the chat there, and everyone else, Scott's contact information. You can reach out to him directly regarding course and education and mentorship, etc.
I don't know what he means by red line either. If you want to expand on that, then I can try to answer it. So anyway, we're not in any kind of important area. So I was looking here, we may be at a red lug where I can be aggressive off this setup. This is ES I'm talking about. Just dancing around the yellow lug, which is a directional line. It doesn't, it's very choppy around this line. The one thing I could have possibly done, this was an old market profile composite. That is a place where you can be aggressive sometimes. Let's actually, these are the last 2 days. So this is how I trade with market profile. And I use time-based TPOs, time price opportunities. I don't do the volume profile. I know some people do. I just think these are better, and I look at volume enough with what I'm doing. I want to have a different view of the market, so I use the time price. So this is a place I could have been aggressive on that. So you got a stop run right at the top of this, right? This is the current 2-day composite. These markets, you'd be amazed how they respect these areas. These are the areas that I talked about earlier where I'll pay myself as well. That's the one that I missed when NASDAQ came down and didn't quite get to the one. But anyway, this is an area where I could have been aggressive, but it wasn't really confluent with anything except for 2 standard deviations of VWAP. So I'm fine with being conservative with this setup, right? Meaning there's 2 ways I trade these. Again, I either wait for 110% of an ATR, just hop in, or I wait for the ATR retest the failure. So for this one, I'm waiting for that. And this is the problem. Not a problem, but you have to accept there's going to be times where you get like this one here, down here. If you were saying I want to see, and I definitely would have done it for this one because we were breaking down and I thought we were going to 0, right? So I wanted to see ATR retest failure. Well, guess what? It didn't do it this time. And you missed this whole up move, and you're sitting there kicking yourself like, I just missed a 35-point move because I was waiting for retest failure. And that's what you have to accept if you want to be conservative. But I will tell you, when you wait for the retest failure, your win percentage is way, way higher than just getting in aggressively. And that's why I've changed it, because I'm getting burned too much getting in aggressively. When you see this, and this, that is just extra confirmation that it's going in your favor. So this may just literally come right back to the zone and not retest this first zone. So if it does, it does. And I just wait. There's always another setup. That's why you guys want to be watching multiple markets. So when one market sucks, you can hop to another one and you can hear your alert and say, oh, there's something going on in soybeans. Oh, there's something going on in crude, right? That's why, and I saw there when you did the poll a couple weeks ago, like it was thumbs up, thumbs down, and there was like 80% thumbs down of watching multiple markets. Like, what are you guys doing? Like, you don't want to be, I understand trying to be, not perfect, I can't think of the word, but trying to be an expert at one market, that's fine. But you are going to get yourself into trouble on days that the trade is terrible, which it's been the last few days, right? You had OPEX, and in the last 2 days, like the afternoons have been horrendous. you're gonna, especially if you're trying to do this to pay your bills, you're going to be putting on trades that you normally would not put on because you feel like you have to make money. That's another trader mistake. One of the biggest mistakes where, traders think this is like a job where I'm going to make $500 a day. You may, if you're a good trader, you may make $500 a day averaged out. You're not going to make $500 a day every day on a consistent basis, ever. Never going to happen, right? So you have these newbies that come in here, or these, wishful thinking people that think every day you're going to make $500. It's not going to happen. So my point is, there's going to be days that the market sucks, and if you are expecting to make your 500, your $1,000, $2,000 a day, or whatever you think you're going to make, you're going to be taking trades that you don't normally trade because you got to pay your bills, right? So the point is, if you're watching multiple markets, especially with this SI indicator, right? I don't know if I mentioned this, the most powerful thing I've ever seen. If you hear it firing off in other markets and you understand these setups and you understand the same thing works in ES as it does in soybeans, as it does in gold, as it does in soybean meal, bonds, doesn't matter. Volume is volume. Caught traders are caught traders, and that's what we're basically trading off of, right? I mean, copper, anything, any of these markets. Then you can move to another market and trade these setups in another market. It doesn't matter what you're trading as long as you know the thresholds, your ATR, you're good to go, right? So don't pigeonhole yourself into one market. If you do, you're just doing yourself a disservice, and you're most likely not going to do very well on days that it's terrible. You're going to be forcing trades, and you're just going to be algoed to death. All right, I'm doing a lot of ranting today, probably because there's nothing going on, but waiting for that. Let's see if we get that. We did not get the retest. I almost missed this, but we did not get the retest of this zone. So nothing else is fired off here in NASDAQ since, what's this? Maybe not. It did, of course. This is when my volume was down. So let's see. It was way up here. Yeah. I'm going to get rid of this because we've traded up and through it. This is one I was originally short on, but it doesn't matter now because we have some new events. So this was sell ice from this morning. You can see we came up here again, sell ice again. So that's kind of important to know, right? If you're looking here, you don't see this on a bar chart. You have no idea. You're like, oh, pre-market. This was right after the whatever number it was at 7:30. Came up here again, more sell ice, right? So actually, what's that? I'm just seeing when this first fired off. Yeah, this was a little bit here, but this was the original zone. So it doesn't matter from before, but what I'm saying is it probably behoove you to know, hey, somebody, big money keeps selling up at this price, right around this 11,450 price, right? All right, so I'm just going to get rid of this and draw this new zone.
I mean, that's something that's like hard to get across to a lot of people, like when they're looking at Bookmap. And they're just so reliant on candlesticks and indicators, and I kind of have a hard time understanding that, guys. I mean, it's okay. I mean, it's the standard. It's the way it's been for 30, 40, I don't know, 100 years.
That's why 95% of traders failed for the last 100 years. Because
Yeah,
they're trying to find the magic indicator.
yeah, exactly. And I mean, these days, I mean, really, this is the way I view it in my humble opinion here is, well, what could we show back then? Or, just open, high, low, close, different periods, because we can't show every single price action. So we're showing a period. And then to make up for that, we're trying to show some sort of indicator of like, wow, that's a lot of buying. And the candles went up and up and up, or bar charts went up and up and up. So what is the indicator? What is some sort of percentage of this show, which tries to make up for the lack of transparency? Here it is in Bookmap. It's all there on the chart. There's nothing lagging. If you want to know what's within a candle and where the volume precisely traded, it is there. If you want to see not only where that volume traded, where it transacted into high liquidity, it is there. You can see it historically as well as current market. And that's all it is. It's just visualization of the market in a way that's just giving a lot more transparency.
Well, it's visualization of what's really happening.
Right.
I can't say it enough.
It's
It
not some
doesn't
sort of
matter
derivative. Right.
what indicator you're using. It doesn't matter. Like I read the other day, some guy on Twitter, he had a lot of followers. He's like, price action is king. What the hell do you think drives price action? Volume. Price doesn't drive itself, right? Price is happening because of volume that's occurring. Like I just cannot comprehend people that, play these indicators or the price action. I'm watching the Dow. Okay, well, the price action occurs because of the volume, right? So if you understand the volume in the areas and where the traders are placing their bets, that's the most important thing. That's why I will look at this type of volume. This is still volume, right? It's a bar chart, but when you see these balance areas, right? These are traders placing bets. You want to pay attention to those areas when the market comes back to them, right? It's the same with the volume setups, right? So I just even with your indicators, right? I know some indicators work some of the time. I'm using Ludwig levels and so on and so forth, but I don't use Ludwig levels by themselves. I use them with the volume. That is, and then they're like the most powerful thing out there. When you can combine a major Ludwig level with the volume setups, I don't know a better edge in trading, honestly, and I would say it every time, right? So yes, you can trade these by themselves, and most people have up until now, and she's been around for 13, 15 years, so they work, but they work even better when you understand volume and you can apply the volume. That's why she's a member of my room, because she wants to learn, and she's been learning. She's been in there for a year and a half. She's learning how to incorporate and make her indicator better, right? The person that makes this indicator is in my room learning how to apply volume to her indicator. So that's my point. No matter what you're using, you will make it better by understanding this volume and applying it in the areas and understanding when it's right, when it's wrong, so on and so forth. All right, I was just going to show you guys something. I'm doing a lot of ranting today. So that setup in NASA. So this was an opportunity where I could have been short aggressively. I didn't even hear this fire off because my sound was down. But this was this. This was this. Remember I said I'm waiting for retest failure unless it's an important area? Well, this was an important area. That was right here. So this zone was important that I had already previously drawn. This was this directional conviction. We built a little balance here, a little bit of directional conviction, right? And then we just moved down through here, and then we came back to it. That is an area where in these zones, I will take trades aggressively. So, and then what do we just do? We put in a selling tail. So this looks to me like it's either going to just build balance for the rest of the day, or this is going to turn around and do that, right? So there's another thing too with these. This was the balance area. This is one of my favorite trades at the time, or when this happens, right? This was a breakdown, right? This is a fail breakdown. The minute this gets through the high volume node, which is the middle of a balance area, it's just an area, it should do that, and that's exactly what it did. But you can see it came, and look where it came back, held the high volume node right there with that buying tail. This one right here, the instant rejection, right at the high volume node, and then what happened here? Now we're back to the top of that prior balance, even though we have traded through it once. It's still important, and that's where we bounce. So these, if it would behoove you to understand how to draw these zones, tops and bottoms of balance areas, high volume nodes of balance areas, buying and selling tails, directional conviction. Those are the 4 important areas of charting. I will be coming out with that course too one of these years. Maybe when I'm like 80, I'll put that out. But that's how I draw my zones. So anyway, that was an important zone that I could have shorted, but I missed that trade. Speaking of trades, this is starting to roll. What I want to watch here, and this is not surprising to anybody that has Bookmap, this is a magnet. The longer this liquidity has been in here, the more these guys want to get filled. It's not, wow, look at all this size. I know it's not a lot of size, but relatively it is a lot of size. Most people will be like, oh man, I want to short this. Somebody wants to sell this really bad. It's the opposite. Somebody really wants to get filled. The longer it's in here, the more they want to get filled, right? So meaning if something came out, say OPEC came out and said, we're cutting production, whatever percent, this market's going to rip right through there. Well, they're willing to keep that in there. What does that tell you? They want to get filled, right? This isn't I want to sell here. It's I want to get filled here, right? Like that's the key. The point is, the longer it's in here, the more you can rely on it to get to those prices, right? It's a magnet. So what I want to watch here many times as it comes up to this size, these algos will then pick up the size in the order book and know it's obviously an outsized order, and they'll turn around and they'll push the market away from it, hoping this person, this entity chases price down, right? And then they turn around and they'll whip it right back at you. This is what they do to you guys all day long, right? So what I will do if this comes up here, I'll watch very closely, and if it starts to get right here and it starts to turn, I start to see the red bubbles. This is where I use my bubbles, right? So many guys that get Bookmap, they start trading off these bubbles, and it's just not. Hold on, I just forgot I had an order in the order book like usual. It's not hard. I lost my train of thought. Oh, they're trading off these bubbles. Yeah, the bubbles are important. It's buying and selling, but it's still pretty damn random. You want to pay attention to the bubbles at important areas, right? Meaning if this comes up here and you start seeing red, I'm going to get out of one of these, right? Doesn't mean you just automatically get out when it gets there. What if it comes up here and you see blue, 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 blue? Well, why am I going to sell if nobody else wants to sell, right? So you can judge by the bubbles when it gets to this price. And here we go. So I will watch that. Hopefully I don't forget about that. We'll pull that back. We're waiting for a retest of this zone here. I missed an aggressive short here. We have tick strike here. This is my torture treatment. This thing is imperative to my trading because I want to know what these are obviously the FANG stocks, the stocks that are highest weighted in the indices that the futures are derived from. So it would behoove you to know what's going on in these too, but they drive me crazy because when I talk about this all the time too. It's bad enough putting a trade on and watching your P&L go against you, and then you have to hear it. It's literally, I call it waterboarding. I've never been waterboarded, but I would assume that's what waterboarding feels like. So, this is an incredible product. I've been using this thing for probably 15 years called Tick Strike. Again, go to my website. You get discounts to this as well. These are just meters based on from 1 to 11, 1 to 15. So 15 being the highest, and it's an algorithm that takes into consideration the speed of the orders coming in and the size, and it represents it with the audio alert, right? So I used to use this just to know if other stuff was firing off in markets, right? So if I'm staring at one market, I can't see something else going on, especially if I'm watching 5, 10 markets. So this would just say, hey, like we can even watch here as this thing, well, I'll even know as we get to that liquidity if this is firing off. See, I have it set at 11, so I only get alerts. It starts to make noise if it gets over 11 on the meter. So the last spike was 13. So it just alerts you, but then you can also judge. So say, for instance, you can use this as part of your trade plan. Say, for instance, you say, Scott, I love your theory or your methodology of waiting for the retest failure, but the way I like to trade these zones, remember we talked about the art, the science, and the art. The way I like to trade them, I use tick strike and I wait. And I wait for a retest of the area, and if I don't hear these stocks, they're not buying these stocks seriously, I just short right away. That's a perfectly viable trade scenario, right? For a trade plan. So this is very important too. Highly recommend it, but I will tell you, you will be tortured. Some days I have to turn it off for a little bit so I don't break something. But all right, so we heard this fire off. This is a new setup. So worst case scenario here now is I can trail my stop on my long, right? So we will draw this zone. Gotta take the bubbles away so I can see the price line again. Bring this price line up. Just got to right click here, configure visible components, last price. Click on that, and then you'll get this white line. That'll really help you draw the zones accurately. Then you come to where this spiked. That game started, use your little crosshair here. Click on that. That'll give you the crosshair. That spike started right here. So you can see the spike started here. Here's the price. So I go to my hotkeys that I only know how to use. Draw that. And then I try to get the bottom here of this spike. That may not be right. Might not be right, but we can adjust that. Let's make this blue for buy ice. There's no hotkeys for this yet, but hopefully they are soon because I talked to them about this. There's your zone, possibly, and then you scroll out to make sure you got it right. I did not, so you see this, right? So this kept coming in. Actually, this was a spike. This was not threshold, but this was the main spike. But you can see I'm still a little bit, I got to go a little bit lower. So all I do is hit the edit function. I have a hotkey for that. Pull this little circle down right to your price. That is a accurate zone. I bring my bubbles back. There you go. So now what do? I'm going to put these prices in and figure out where I can stop out of this trade if it comes back on me. 67 is the high, 89.60 is the low. Handy dandy spreadsheet. Go to CL. 89, 67, can't remember. 67 and 60. 89, 60. ATR is currently pretty close, but you want to make sure it's exact. 28.2. You see it right there. 0.282. Here's my position, right? So if I'm going to go short, I'd be short at 89.29. Well, that's where I'll stop out as well for my current long, right? I wouldn't go short there anyway without a retest failure of this zone. So what I can do now is you see where this stop was. This is how I trail my stops. This is how you should trail your stops. Not based on I want to pay my rent. I want to break even on this trade if it comes back, right? I would have been stopped out probably 3 times if I waited for this to, if I got in, I'm like, oh, I'm going to get in, I'm going to come out like right here. It's a perfect example, right? I get in right here. This thing moved, 25 ticks in my favor. Oh, I'm moving my stop to break even. And then you get stopped out. And then you watch that and you're like, oh my God, why did I get out? Right? Please don't get algoed. Please, begging you. Wait for something new to come in. So now I'll trail my stop. Here's my stop. I'm going to bring it all the way up. Say 32. If this stops, it stops. Right? You can't just hope a volume event. You just can't pretend it didn't happen, right? So it's like, if this comes back, stops me out, sucks, just like it did with NASDAQ today, right? But 829 is actually the price, sorry. But I give it a chance, right? So it's either basically scratch the trade, you see that? So I didn't move this to break even because I just wanted to break even. I moved it to break even because of a new volume event. That's where I'll get out. If not, I'm giving this a chance to do that. And then I can actually wait for that, and add to the trade. Potentially. So we'll see how this plays out. We'll keep this little guy here so I at least can know what's going on. One of the reasons I have it. Still waiting for a retest there or a new setup. Neither one has occurred. NASDAQ, same thing. This is really surprising. So this is what I was actually waiting for. If this new setup didn't come in, that didn't happen. I was waiting for that and I would have gone long, but now this is the newest setup, so I'm waiting for that to go short. But it's not surprising this thing's bouncing around between the volume events, right? Because those are the most important thing in the market. I don't know if I mentioned that. Russell. Actually, I could have gone long here. We were talking about how I missed this trade, but you can see, like, this is what I'm talking about, guys. I can't stress this enough, right? So say you play this perfectly, you're in. Yeah, I'm in. Oh yeah, it's moving in my favor. Well, my stop was down here, like Scott said, but you know what? I don't want to get back this profit, so I'm gonna move it up to break even, and then you get stopped out, and then potentially watch that happen. Please don't get algoed. I can't stress it enough. Like I tell my room, if you want to do that, just PayPal the room the money, and go do something else because you're going to lose your money. So might as well give it to us. We can do good with it. All right, any questions, Bruce? Bueller?
Yeah, sorry.
Did you?
Sorry, I was on mute. Yeah, no questions here. Let me see in Discord. No, I think we're pretty good.
Awesome.
I just wanted to mention something in here. And Scott, I mean, I forgot to mention it to you. That there's a few more streamers that we have going. So it's been kind of a soft launch, and talk about algos. One of the rooms that we launched, and it's a very different room or stream, is the Algo Boys. You'll see it in our Discord channel, but they're looking at, it's basically father and sons trading, and they looked at or they can identify, because they used to write the algos for well, they've written several algos and they understand the behavior. So when they see large algorithmic behavior into the market, they'll mark up their levels. And
How do they determine algorithmic behavior?
well, I mean, because they can identify it. They
How? That's what I'm asking.
because they've written those things in the past, and they know
I mean,
what that
90%
looks
of it
like.
is algorithmic behavior.
Well,
So that's what I'm not
but there,
understanding.
that's where it's really interesting, because you're talking about getting algoed to death in here. Well, the algos, it depends on what type of algos. Those could
Of
be,
course.
they could be naive market making algos that are just making the market. It could be, there's algos that look at balances and imbalances and simply that, and then trade it, and move the market. And that can be just so annoying. You're looking for a breakout, and then what happens? The market
No.
just pukes. And then what does it do? It floats right back up and then breaks out. So look for those kind of that algorithmic behavior. Then there's other kinds of algos, stat arbitrage, algos that they're looking at some sort of they're informed actors. They know when there's some sort of imbalance or discrepancy with some of the confluence or correlated markets, and finding a great price entry. And I don't know exactly what they're looking at, but they've made a distinction between these algos, and they're looking at this large algorithmic behavior, marking up their levels, and it's uncanny to see how these levels match up with these other levels. So I don't want to go too much into it. I just want to say that, like what Scott's talking about in terms of the algorithmic behavior, well, we're starting to uncover and starting to learn more about it here with the Algo Boys, and their Discord chat room in Bookmap there. So yeah, you might want to take a look at that. There's also Doug Pless, and he's going through his options strategies in there. Really good stuff. That's after Tom B's webinar. So basically, we got a whole lineup here. Is that we're turning into like a television channel, and we got all sorts of shows lined
That's
up for you guys. So
pretty amazing. You give that stuff out for free. I mean, it's pretty amazing. Like, I don't think most traders understand what they get with Bookmap. I mean, as far as like how powerful it is. One, with your quants, what they came up with, the reading of the CME MBO data, but
yeah,
just with these rooms, like you got some guys charging $1,500 a month for that type of access, right? So that's pretty impressive.
yeah. I mean, look, our goal is really simple. Is just to provide high value and quality content, and then let I provide the foundation of like, okay, well, here's how the markets work, blah blah blah, so that then people like you can come in and go, well, yeah, go to the advanced webinar, watch Bruce to get a foundation, and then watch my very specific way of trading. That's the whole goal. That's why we have all these
Right.
different traders in there. Tom B, you want to watch Tom B, you want to trade volume profile, go there. You want to trade options, go. Now you've got Doug. You want to learn more about algorithmic behavior, great, go to the Algo Boys. You want to trade stocks, J Trader. You want to trade crypto, Rain, in the morning. So we're trying to cover all the bases here for you guys. And Scott's got a very, very specific way here to trade. It's unique, and offers a lot of insight to what's going on. You incorporating, encapsulating many of the things that we talked about in the advanced webinars. It's just niche, very specific.
Right. There's
So
nothing
that's
wrong
my
with
that's my rant right back at you.
that. Wasn't a rant. You weren't really yelling at anybody. That's kind of weak, actually.
Ooh, I have to work on
Yeah,
my rants. All right,
yeah. You gotta.
I'll study rants.
You should have enough experience for the last almost 4 years of hearing me. But all right. So I mean, I survived that move down. Now there you go. You see the tick strike firing off. So even if I wasn't watching, I can hear like something's firing off, and you have distinct sounds you can set. They need more options. There's only like 5. I don't know why you can't just have your own sound for these, but anyway, I would hear that. I would know they're buying crude, and you can see this is almost max buying. Here we go. Right up to this liquidity. I'm ready to get out of one. If this gets up here, and then the algos start running away from this price, I'm getting out of one of these. If it can get up there, or we can be tortured for another hour. Yeah, I mean, what I was saying is, this is how I trade. I'm always open, and you should be too, to add something, right? Or something. Hey, I didn't know about that. Like I'll listen to those algo guys. I want to. The more I can understand about the algos, the more we can come up. The one trade in my room is based on algos. It's based on literally opposite of what I'm doing here in the position trading. We're playing for the algo trade, right? So it's like I'm always open. If you ever meet anyone who's just set in his ways and not willing to learn new things, that's not the person you want to be listening to, right? So I'm never in my life say this is end all be all. You never stop learning in this business, right? So I'll definitely listen to those guys, and and the more experience you get, you'll listen to something and you'll be like, yeah, I don't agree with that, or wow, that's something I never thought about before.
Their room is a very different approach. They're just in there showing levels. They don't want to talk. They want to trade. They're trading. They're active. And it's not like our webinars are an hour and a half. You're doing it as a nice service. You're like missing trades because you're doing this service. They're just showing their levels. They're high quality professional grade levels, and that's it. They're in there though all day long. So check out their levels and see how they match up with what you're trading. And
right. Well, that's the perfect example, right? So if
yeah.
they have a level at 38.70 and you see a buy stop run that starts to fail there, you're like, well, first of all, I know that's not real buying. I know it's just guys puking, and it's failing, and I know it's their levels that are golden. This is what I'm talking about. So it could be anything. It could be your Fibonacci. It could be MACD or whatever you guys put on your charts, right? They make sense, and they're most important when you get the volume set up in that area, right? So it's exactly the same with them. So I'll listen to them, watch the levels, we can mark them down, and hey, if you get a volume event there, that's even better. It's called confluence, right? The more things you can, and I'm talking about anything. I'm talking about even VWAP, right? We talk about, I don't usually put on trades or take off trades at VWAP, but if VWAP is confluent with something, well, then I'll keep that in mind, right? I think it was like the day before yesterday, we were short crude, and I saw VWAP was confluent with baby lug. These are like minor lug levels, and it was confluent with like a point of control of a market profile composite, right? And I'm like, okay, I'm going to get out of a couple there. So absolutely, right? So my point is that these areas make way more sense. One, the more things that are here, like this is VWAP, this is yellow lug. Then if you get the end all be all, in my opinion, the volume event, then that's a golden place to be trading. Either way, it breaks from that event because that's an important level, and then you wait for the real-time volume to confirm that area. So the same thing with the algo boys or whatever they're called, and anything that you're using.
Yeah, right? Absolutely. It's the same thing. It's like you're looking for your event or your way of trading, and then your higher time frame levels. Then you're looking at the order flow to give you the direction.
Exactly, because that's the most important thing you can be looking at. Again, you guys will wake up in a sweat hearing me say that.
Scott, one of these days I'll come down and visit you in Arizona, and I'll try to play golf, but I'll likely just sit in the golf cart and drink beer. But it'd be a blast, though.
I'm a scratch drinker. That's what I always tell my. I'm like an 8 handicap, but I always say I'm a scratch drinker. It's probably not a good thing, but I can't golf without drinking. That's my problem. So. But yes, you're more than welcome. Anybody actually wants to come to Arizona and get beat down on the golf course, come on down. I'll give you a little beating. There's some scratch players on here like.
Yeah, they're
chomping at the
probably
bit. Like,
probably
okay, I'll
probably
let you know when I'm there.
probably some
You
good
gotta give me
players.
strokes if you're
Yeah.
straight. We'll play with handicap. You gotta give me strokes, but I'll bet you. Not a big gambler, but I'll give it a shot. That's sarcasm, by the way.
That
All
was
right,
pretty. That
so a
was
whole
pretty
lot.
good. You could bet like your course or something like that.
Oh, absolutely,
Yeah, there you go.
100%. All right, so just nothing going on. Stalling in between these zones and Nasdaq. Remember, we're waiting for this was before, so I'm not trading off of that. This is the most recent, so I'm waiting for a retest of that or something new. Same with the ES. Looks like it's going to head right back down to this zone, which would not surprise me in the least because that's how it works. Actually, I want to stay on top of this ATR though. It's not as important for the position trading because it's a slower moving thing, but for our strategy working on the room, you gotta. And I don't want 20. I know that. 'Cause for instance, to say we get off the webinar and nothing happens, and then we come and we go, nothing happens, meaning a new setup, and we do this. Well, it's like, okay, well, where do I short? Well, this tells me because I put my zones in, and you want to make sure your ATR is current, right? But as of right now, I would short, if that retest had failed, I'd be shorting at 57.5, right? That's 110% of an ATR below that zone. So there's ours 9 something right now, so it's just outside an ATR. So if we go here, there's 57.5. That's where I would short it. And then where will my stop go? My stop would go 80.5. Numbers can 23 ES points. I can put on 2.6. I'd round up to 3, or you can put on 26 micros. There's nothing wrong with trading micros, guys. Nothing. You want to trade micros, especially if your account's not that big. If you have a 5, 10, even $15,000, $20,000 account, you should not be trading normal size products. You can lose a couple grand on a one lot in ES in a heartbeat, right? So it's like, if you had a $20,000 account, that's 10% of your account value. It's very easy to do. So just trade micros. Again, don't email me for this spreadsheet. This is proprietary to my trade room. You join my trade room, you get access to the spreadsheet, right? But you want to, you can go see if there's something else like this out there, but you want to have something like this where you can judge how much you should be putting on, because if you're over trading your account, you will blow out. So this will bring me to the Apex stuff, right? That I said I didn't want to get into earlier, but then there's nothing going on. So the Apex makes it's hard when you first sign up, because you can do all these different accounts, right? So I did the 150, right? So this is really important to understand. So you got to trade a minimum of 10 days. You can put on 17 contracts. You put on 17 contracts, you're going to blow out very likely unless you get lucky. Plus that's why they make you trade 10 days, to prove that you didn't just put on one lucky trade. So anyway, you got to make 9,000 before you lose 5,000. But it's not just lose 5,000. So I can't tell you, I think I've blown, even in this live trade that I'm doing, where it's live now, we're doing the reversion trade. I've blown out of it. I've qualified twice live and blown out of both times. But even before, let's just go back to the practice one, right? So trailing stops 5,000. I've probably done this 10 times now, where I'll make, you start out at 150 grand, right? I'll get up like $7,000. I'll give back 5, and I'm still up $2,000 total. But I blow out of the combine because you have a trailing threshold of $5,000, and it makes it very difficult. It teaches you, one, how to manage your risk, right? Because you can't, you don't want to get so close to your profit goal and give back. So you've got to start to cut down your size, so on and so forth. It just teaches you the right way to trade. But that's what's so hard about it. When you go live, it's the same thing. You still got to make that amount. You got to wait 25 days to get 25. You got to trade 25 trading days to get paid. Then you can request once a month. But so say for this instance, I do the same. I go up 7,000 again. Well, this time the trailing stop will go from, when I first started, it was at 150. So the day I go live, it's at 145, right? You get a $5,000 cushion. But as you get above that 5,000 and higher, now I can give back. Your trailing stop goes to 150, 150, 100. So I can give back the full $7,000 before I blow out versus 2,000. So if I go up 20 grand, I can give back the full 20. If you're on the tryout you're up 20 grand. Well, if you give back 5, you're done. So that really sucks. If you're up $15,000 and you blow out of the account. So that's what you got to be careful of with this. But it's, again, there's no reason not to do this because you have to put money in, right? So if you want to do the $150,000 account, it costs you $297. If you use my code right there, then so it's still got to put in 106, whatever, $150, right? So you still have skin in the game. So you don't want to lose. You're not going to just put on these random haphazard, half-ass trades, because you're got to ante up again. And when you blow out, you got to put up. It'll charge you monthly $150. But if you blow out, you can re-ante for $80. So it's still money. So you will learn to trade, and it's not just you won't just be, like I said, trading half-ass because you're on sim, because you are risking your own money. And again, if you do well, then you're funded, right? And if you don't, at least you're losing $80 versus 8,000, right? So that's my rant on that. But you just got to be aware you could be profitable and blow out. But this is the best one I've seen, and that's why I promote them and that's why I'm doing it myself and did it myself. So on this current one, you can see, I'll show you this right now. Keeps track of all your stuff here. Let's see. This is the PA, right? And you go to account summary. I don't know why this one's still in here. So this is a perfect example. This one I was up 5 grand. I blew out of the account. So this was just the practice. This is the live one. So in the live one, currently up 9 grand. I traded 13 days. So when you get to 25 days, you can start pulling out. But for the first, I think through 3 withdrawals, the first 3 withdrawals, the most you could pull out is 2 grand, which is all you want to do anyway, because this counts as a drawdown. So say this is 25 days now, and I want to pull out, I could pull out 2 grand. Well, guess what? Now it's like I'm only up $7,000. So now if I pull back to that drop dead, I'm only $7,000 away versus 9 because I took money out. So you definitely want to let this just makes you let your account grow, so you're not pulling out and then you hit your threshold and then you lose your live account. See what I'm saying? So highly recommended. Again, see the code on my site, the Pulcini 50, all this stuff, you get these discounts. So that's about it. That was the rant on that one. This is just horrible trade. Nothing's going on. I'm still in this crude trade. I told you I'd probably get tortured for an hour, and that's what's happening. We're waiting for a retest of this zone or something new. We're waiting for a retest of this zone, something new. No, nothing else is going off in any of these markets. Actually, it looks like I missed a nat gas setup. I might have this on. It was right at the number. The number came out today, but let's see what this was here. It was 152. It's basically just balancing in that zone. No, it's moving below. So let's draw this just to see. Granted, like I said, this was right at the number, but this was threshold. I used 150 for nat gas. So let's draw our zone here. Remember, you want to go where it spiked. The price line that's right there. Top of that was that's correct. I told you, guys, it's uncanny. Look at this. It's unbelievable. Every time I miss a damn trade, you guys seen this setup before? I don't know. I've talked about it 85 times in this webinar. Here you go. So disturbing. It's my own fault for missing it, but it's like they are just perfect when I miss them. There's no sweat, whatever. You had setup. Here's your ATR. Here's your retest. And another perfect example. So say we're all over natural gas. You're like, I wonder why Scott's not taking this trade. I'm going to go short. There you go. There's your ATR outside of here. Your risk above here. Guess what? If you put on your short there and you said, I only want to risk 30 ticks. Guess what? You get stopped out. Then it goes. This is why you want to put your stop outside of the volume event. Anyway, it did it once. It did it twice. It's not a coincidence. It held right in that volume event area and then died. I don't know if you like 200 tick trades. This was the trade for you. Look at that. This makes me sick to my stomach. I knew I couldn't get to this webinar without wanting to break something. This one hurts. I should have been short this market. I don't care where we were. I would have shorted it because this is the conservative entry. I mean, you're seeing it. smack you in the face. This is not a coincidence to stop right in that zone and then failed and then now is getting killed, right? It's like, it's the most powerful thing I've ever seen. I'll say it until the day I die. Let's see here. So if I was short, which I should have been, this is so disturbing. What are you seeing here? Here's your story. One, this thing couldn't make it to the top of this composite, and now it's breaking out. I would be short, and I would be either waiting for. I probably would have got out of one right here as an example of confluence, right? Baby lug confluent with the bottom of this with this market profile composite. So I probably got a couple there actually. So say I was short like 4. That's pretty much what the size would have been. That's 59, right around 48, right? By the way, that noise is them slamming natural gas, of course. And then I'd be waiting for major lug or an opposing setup. Here we go. And I get out of the rest right here. This was a huge trade. 240 ticks. It touches this blue lug. I don't know if you guys like those or not, but this hurts. I'm not gonna lie, this one hurts. My volume was down. I didn't even hear the setup. But for learning purposes, you guys are around here to learn. That's what you see. Unbelievable. Hey, just guys, it is this, guys and girls. It's the same stuff every single day. It's the same patterns every day. What would you have seen if you were doing your thesis when you brought up this today? Hey, look at that. Hey, look at that. I wonder where the market's headed. What did we just talk about magnets? There we go. This will get filled. It might run away first because this is the most algorithm market out there. That's why it looks like a Christmas tree, right? I would already be out of one here because that's the baby lug and then market profile composite, but this is your next one down. I will promise you, I'll bet anyone, if you want to bet around the golf, both of these get filled today. It's just, so the point is, you use this stuff to come up with your thesis. Like you look at your bar charts and everything else, you're like, oh, this looks like short today. And then you pull up your book map and you see bands of liquidity below. You're like, it's go time. Give me a setup. I'm short. Boom. There you go. Again, if you like 250 tick trades. Let's see where this stopped. I got a little bit of these zones from all from before, but there was really nothing on the zone stuff, but I would have been short. That one hurts. I'll get that off the screen before I break something. It's not a 250 tick trade, is the one I'm in, of course. It's instead of torture treatment. Any questions, Bruce?
Let's see.
You need to talk me off the ledge on that trade. That one hurt.
No questions. We're good.
Alrighty.
I like this golf idea though. Like take Scott on and see if bet around a golf and bet his course. So here it is in the I'm putting Scott's contact information again into YouTube and Discord for you guys.
So this is like what Bruce was saying. Like I missed so many trades on these webinars, and it's fine, but it's like this one hurts. Like I just didn't see it because I'm on one screen for the webinars, and I'm not like scanning my stuff. I had my volume down because I didn't want you guys to be distracted by my news service, and I missed this trade. This is going to be a 3. Look at this, right? It's going right down to this next liquidity. We had 300 tick trade.
So why don't you just get in and put a stop at like 5 ticks?
Now you really want me to break a screen on the webinar?
Sorry.
Yeah.
I just couldn't help it.
I'm gonna hop in now and risk 20 ticks. I'm just gonna. Yeah.
JC is asking how close you are to Scottsdale. So.
I'm in Scottsdale.
Oh well, there you go, JC. You got his email right there. So give him a shout.
Sir. All right. Well, nothing going on, guys, and we're heading to 9:30, and this is when your other guy starts, Tom. So Told you what I'm going to do here. Barring something new coming in, I will short that. I'm still long crude. This is trying to come back to make me even more mad. But like I said, I'll just scratch a trade, wait for something new. You saw that natural gas trade. That one leaves a mark. Now, I still think these markets are going to break. Right? So what does that mean? Well, first of all, real time. What do you see here? That is a selling tail. That is not bullish, right? Now it's trying again. I think if this gets below the zone again, I think we're coming down to minimum here. And this is an important spot gamma level, right? So I have in mind what I think is going to happen, but I'm ready to pivot first and foremost. But I need to see the real-time volume, and then I'm ready to go. So if I think this is going to break, then I see a short setup. That's like an A+ trade to me, right? You can trade bigger size. Remember, you don't want to be risking more than about 5 to 6% of your account size in a day. But that doesn't mean, like I told you, I tell my room all the time, I think I've said it many times in here, where when I first got back in the business, I was trading with SMB Future or SMB. They're all over the internet. You guys know they are. They trade mainly stocks, right? I was going to learn to trade stocks instead of futures because I was so jaded by futures and being a millionaire and then not. So I was going to trade stocks, and they literally ground their traders if they get an A+. So they have their playbooks, right? So you should all have playbooks based on you can do it off what I'm telling you, come up with your own stuff with your rules, so on and so forth. Most important factor of trading, obviously. But if they would get their playbook and they would have an A+ setup they already had laid out, and they would get it and they wouldn't trade at least double size, and they would be grounded the next day, meaning they would be put on the simulator. So meaning you don't lose more than max 6% of the day of your account size, but that doesn't mean you can't put on 4% of the trade. You just got to know, okay, this is my A+ setup. I think this is going to break. Here's my short setup. I'm going short. I'm putting on 4%. Well, if that loses, you only basically got one more bullet risking, my normal risk is 2%. You get one more bullet, you lose on that one, you're done for the day. You got to be able to respect that and accept it. It doesn't mean you can't trade bigger in certain situations. So my point is, this is telling me if this gets back below here, this is an A+ trade. I may put on a 4% trade versus the 2%. And that all you got to do here, if you have anything like this, or come to my room and you get it, is you just make this 4%, right? There it is, and then changes all this, and I can put on 5 versus 2.6, right? This is the most important fact. Making your playbooks and then respecting your limits or your risk is the absolute most important part of trading. Because I don't care how good of a trader you are, if you don't have money to trade, you're not going to be trading. So you have to respect your risk. I was stopped out of crude, basically a scratch. This one didn't rip 250 ticks in my favor, shockingly. Let's just take one more look before I have to take a walk here. Yeah. What I would do here, I think this is actually right at blue lug. I'd probably be out of everything right here. Let's see. You could wait for that if you are short. Yeah, look at that. Well, that's real surprising. Never seen this routine. These things are just seriously. And so what do you have here? I would be out of this trade right now. I wouldn't be waiting for that liquidity. You have blue lug. This was actually a day value area. I don't really pay attention to single days, but it's something you can note here because it's confluent. And what are we? This is VWAP. This is one standard deviation known as daily value area. 1.5, 2.5 standard deviations where you get the algos that snap it back. Blue lug, prior high volume or top of just a one day value area. That's where you get out, and then you wait for your next setup. This one hurt. Not gonna lie, but it's a good education for you guys. And this liquidity got filled. This one will probably be filled too, but what would be ideal actually if this did one of these, the snap back up here. Oh, of course it will, because these guys got to get their fill, right? Wouldn't surprise me in the least if these guys are these guys. So let's go ahead and push it into our orders here. You know why I know what's going on? Because this is what I used to do, right? Put your offer up here, you get filled, and then you start to sell it, and then you push it into your bid. It's just one big game, guys. If you know the game, you can complain all day long that these are manipulated markets, or if you can't beat them, join them. You hear me say it every day. It's the truth. And that's what you get from Bookmap. All right, I'm done. Not a lot of trading. But again, I think there was some decent education in here. You got to hear me around a little bit. All I got, Bruce.
All right, sounds good. Well, thank you, everybody. And the webinar recording will be up soon. Tom B is next. If you guys want to continue the education, he will be trading volume profile. So take a look for that. It's over on Discord as well as here in YouTube. Yeah, thanks, Scott. Yeah, I'll reach out to you. There's some other things I want to talk to you about, some new developments and etc. Some great things coming out and want to share with you. And then we'll be sharing with everybody here pretty soon as well. So looking forward to that. Yeah, have a good weekend, Scott, and we'll see you next Thursday.
Awesome. Appreciate it. See you guys next week.
Okay. Bye-bye.
Bye.